the concept of this right here, it's like, it's the music. I'm like, all right. I know.
But sometimes, we encounter those people, and before we can even get them in touch with you, their mind is so stuck on an interest rate before even seeing the real picture. So what's something we can maybe say to them?
Interest rate is it's super emotional, man. I mean, it's a very emotional conversation because one, as an industry, we really suck. I mean, we do. All right, my industry sucks at it because what are we taught? Just advertise the lowest rate and people will call you. I mean, that's really what it is. And if you really look at the fine print, you have to put 20% down or 30% down. They have to have a 740 or 760 credit score. I mean, I got people all the time saying, I want this interest rate. It's at whatever. I'm like, okay, great. Let me see where you got it from. Okay, and I'll go on the website and I'll look at it and say, hey, did you see the fine print that says, 730, 740 credit score, put 30% down? Like, oh, no, I didn't see that. Okay, that's a bait and switch. They're just trying to get you in. They'll switch you to the program that I'm actually going to talk to you about because you don't have 20% to put down. You don't have a 740 credit score. This is what you're looking for. This is what it's going to be. Okay? That's more of my conversation with them. That's not your conversation at all. You can just have confidence in saying that, yeah, man, those are phenomenal interest rates that are out there right now. And many of my clients and obviously many of my colleagues here are experiencing the same thing at Founders, that buyers are buying at an amazing and alarming rate because interest rates are so low. We partnered with BobMortgage. Bob has absolutely some of the best products and interest rates that are available to you, that he's going to be able to shop for you. And he's also going to provide you what's called an analysis that's going to show you different programs lined out side by side with different interest rates, different down payments, so you can make sure you're getting the best possible deal with the lowest total cost of ownership. What do you mean lowest total cost of ownership? Well, guys, it's not always about just the interest rate. We're going to make sure over the period of time that you're going to keep the home, that you're going to pay the least amount of interest in mortgage insurance, if you have to pay mortgage insurance, over that period of time. And he's going to show you all those different options.
When it comes to the grant, the down payment assistance, is there only one person that qualifies for it? Like, let's say it's a married couple. Could they both apply for both the same grant, or does that have to be just one?
If they're buying the house together, whether they're married or not married, they're buying the house together, then it's just one grant. Yeah, you can't, because everything would be combined and there would be one. So the grant would be tied to the individual and the property.
For DPA, is it usually higher interest rates, conventional and FHA?
Depends. Great question. So it really does depend. So sometimes they're lower because like right now, T-Shack is offering, I think, the 3% grant that they're going to give you. So 3% is offered, I think, at 2.875. So let's say you have a 620 credit score. You're not getting 2.875 on the open market, okay? So you're going to get 2.875 plus 3% money from T-Shack to take that loan. Where maybe on the open market, I'm going to get you 3.5 or 3.375, let's call it, and you're still going to have to pay your own down payment. So it depends. Now, the higher credit scores, you get 650, 660, or 680, whatever. I mean, yeah, you're probably going to end up paying a little bit more, but again, it's really about what their need is at that time. Now, one of the things, guys, these are great programs. Just make sure you don't get too far over your skis. You ever heard that analogy, right? You get too far over your skis, what happens? You're falling forward, you're falling on your face, right? So make sure you stay balanced in your conversations with them because you don't want to get them too excited, right? You want to just get them excited enough to have the conversation with me and let me be the individual that can vet it and tell them, yay, you can do it, or no, you can't. Okay, because there could be a lot of different reasons why they can't have it. I've had people that make too much money. I've had people that have certain credit that is prohibiting it from going in the automated underwriting when I add the grant to it. Even though they make it from an income standpoint, they make it from a credit score standpoint, they could have recent mortgage rates that even though the credit score is okay, it's causing the grant when we put it in there not to like it because then we're adding a gift in there for the down payment, right? So there's a lot of different ways and things that could be helping or prohibiting it. So the important part there is just staying balanced in the conversation and let them know that, look, hey, if you don't have all the money, then there are ways to be able to get you into a home for what you have. Those could be talking to Bob about down payment assistance programs. There are things that we may be also able to do in if the seller is willing, maybe possibly get some seller contributions. There's different ways to do it. What I don't want you to do is just say, I'm not going to be able to buy a house because I don't know. I don't have money. That's not the right answer. The right answer is still having conversations to make sure that you have a plan with the hope to buy.